Hello everyone and welcome back to day 4 of the crypto trading course. We're going to start off right by reviewing ICOs and airdrops. So ICOs, if you don't know, stands for initial coin offerings. It's kind of like similar to an IPO. Basically, it's a way for a project, like a crypto project, to raise capital. And airdrop, in a nutshell, is basically a marketing tool. So I know an example, as a NEO holder, I was recently earlier this year, I received several ontology coins, and I think that the ticker is ONT. That kind of got my attention on it. I actually bought more, and then I traded a position. That went pretty well. So it kind of, by handing out these coins, they get a lot of publicity. So it's really just a marketing expense, really. But pretty interesting because these are free coins that you get, and these are projects that you can get into relatively easy, depending on your nationality and your residence. ICOs can sometimes be tricky. A lot of Americans, for example, they can't register, and it's even getting harder now with the SEC kicking in, ruling them almost all are securities. So it's become a bit more complicated. Airdrops, though, you could basically always just get. This is something we don't really allocate our portfolio to too much. So ICOs are not really my forte. I occasionally share info about them and maybe something that I'm really interested in. Last year I only did one. So that's why we only dedicate 5%. It's kind of more interesting to me, and I do enjoy the occasional ICO or airdrop, or I find it sometimes interesting, or if I really like the project. But a good way to kind of start digging into ICOs if they really interest you is the forums. There's so many crypto forums and sites like Reddit or chat groups or 1,000 Telegram channels where you can learn so much about new projects, or especially with airdrops. These Telegram channels, you go there, you typically fill out some form, and then at one point, if there's an airdrop, you get free coins, or with an ICO, then you have to usually buy one of these ICOs with Ethereum, so and so. But just keep in mind that over 80% of ICOs in 2017, in a recent study, came out as scams. And the first quarter, so that's something to think about. A lot of shady stuff going on out there. And the first quarter of 2018, actually, the ICO funding volume already passed all of 2017. So 2017 was kind of the year of ICOs, and a lot of people know it as that. And I had some friends ask me, like, oh, ICOs are dead. Are you like, is that still a thing? And it definitely is a thing, and I don't see it going anywhere in the short term. It might get a lot more regulation, and but if anything, that's a good thing, because well, in the crypto space, you don't really want regulation, but a little bit of popping of the bubble is really good, because now some new ICOs coming out won't have these ridiculous valuations like they were having end of 2017, where everything was just overpriced. Then again, even the equities markets are completely high, so kind of everything's in a bubble right now. So it's only natural. Another thing I would definitely recommend, even though it can be kind of time consuming, is reading the white papers and really check out the websites, reading who the team is. After reading multiple ICOs and white papers, you kind of start getting a gist of what quality looks like, and you also learn a lot, right? Everything you read, you have 10 more questions. So just one project will open you to a lifetime of reading in thousands of directions. So it's really interesting, and honestly, the best way to get started is just go on a forum, look at some projects, pick your favorite one, and then just start there, and good luck. Another cool thing is to join a few airdrop groups. See if you can get some. It's always interesting. But another site we use is Crypto Panic. If you just type in crypto airdrops, you get a whole list of stuff going on. That's pretty cool too. Again, ICOs are not really my forte, so I'm not going to spend too much time talking about it. But just know that occasionally I do include it in our investor kind of group. So this is my favorite. This is really what I spend most of my time on with our investor list, is swing trading, which is similar to everything we do in the day 3, but with a on average typically a longer time frame. Sorry guys. Ooh. I need a drink of water. So one of my favorite things that I spend most of the time on is swing trading, which is extremely similar to the stuff we do in the trader course and day trading, but with a longer time frame. Swing trades have always been a passion of mine, and I keep my majority of my portfolio dedicated to it, roughly around 50%, and sometimes even fully invested 100% in a. This sounds really weird, 100% in a bear market. The reason I say 100% in a bear market is because I'm not going to be holding extremely long term. I'm just going to be going, I'm looking for, bear bounces, which can be really strong in a bear market. So, like little week-long rallies, 2-week rallies. Right now, it's July in 2018, and they are just happening left and right. But I'm not going to be holding these. I'm not going to really get into long positions because we're still in a bear market and you don't really know how long it's going to go. That's why I'm swing trading a lot in the bear market, and that's what I mean by this 100%. Here's actually a classic swing I did with XRP, Ripple. You've probably heard about it. It was a pretty hot topic back in December and January. I feel like everybody was talking about Ripple. I'm often at this co-working space in Berlin, and the whole office was talking about it. That's how you know it's a hot topic. So the way I actually traded this whole entire thing was exactly like you would see any day trade play out and chart pattern. I was buying, so as a investor, I was kind of getting in early. I had a pretty long time frame because there was a lot of hype about this thing. So I was averaging in all the time, basically on lower points. But once this thing really got volume and I saw that activity was going, I started dip buying every time there was a breakout. Here was another breakout of this line, and then here for the last time, and then I sold the initial lot right at almost near the top, which was pretty rare thing, but this one worked out pretty well. And then the other one, 2 bounces down. Thing is, you never really know how far these are going to run, and it's extremely rare to get out near the top. So this is a nice trade for me because it's one of those things that really worked out well. The end result for me was 447%. I'll have a link here later for the trade review. This was before I did a lot of documentation, and this chart is from the, what's that site called? Cointracking.info that we reviewed in day 2. So I still had this kind of chart auto-generated for me because the API imports just pull out all my information, which was extremely convenient, or else I would not have had this documented. Yeah, I only started documenting everything I do about 2 months ago now. So the next trade I actually want to review here is Ontology. This is the one I said I got from the airdrop, kind of an airdrop as a NEO holder, and this was a coin built on the NEO platform, and they gave, I forgot what the percentage was, but they gave a certain percentage to every NEO holder. And so I got some, I got interested, I was wondering what it was. I don't remember exactly when I got my Ontology. I can't recall. I remember it was in my account for some time, quite some time, before I really did anything with it. But right around this point, when I saw really activity in it, trying to break out, I bought a bunch more here, and I was waiting for a breakout, which we had a really nice breakout. I saw that this was a classic consolidation move. I didn't sell it yet, and then I sold it into the second spike. In all honesty, this was pretty conservative of me. It looks pretty great, but I could have really held a bit longer and made a huge, much better trade, which would have not been a bad idea. I probably would have got freaked out here somewhere, but something that I often don't do is I don't hold long enough, so I get out too early. What would have probably been a good idea is just kind of slowly get out, maybe half position here, half position here, and then I probably would have got freaked out, probably sold the other half here, but maybe if I held into the run-up, it would have been good too. Either way, it would have been pretty realistic potentially to hold longer than this. Then again, when you're up, I'm not sure the exact amount. Oh yeah, when you're up 120%, any sell is pretty amazing, so I can't complain at all. But again, these are my favorite kind of swing trades, kind of holding and basically a pattern you would see in a 5-minute or a 50-minute chart just blown over a longer period of time. That's really what I'm looking for as an investor portfolio. Another thing is looking for value. So something here is I often trade or I swing trade coins that I actually really like. So for example, NEO is one I like to swing trade because I would like to build up a position that in the longer term for multiple reasons. So I feel a bit more comfortable, and I also enjoy it a bit more because it's nice to trade something that you actually enjoy. So something to consider for day trading. I trade all sorts of stuff, even if the company is obviously crap. It just but it's a nice chart pattern, the momentum's there, I'll trade it. But with investing, I'm a bit more edgy. I'm going to be holding this overnight for potentially weeks, and I don't want to get into a company that could just overnight disappear. In theory, anything could, but I'd rather have a bit safer picks on that. So I look for value. I definitely check out the white paper. I check out what's new, old in the projects. I like to check out some of the news and see how it affected the charts. But overall, I'm fairly technical, basically, at the end of the day. It's also hard. Looking for value can be extremely difficult sometimes. For example, in a bear market, a value just completely goes out the window. I mean, we've been going down for about 6 months now, and most bear markets are similar. And no matter how great the company is, it still might lose half of its value. So that's why I do like charts, and I swing trade because, just because a company has amazing fundamentals does not mean it's gonna, its price is gonna go up. It's kind of mind blowing for especially new investors, but that's just the reality of it. Let's see if I have anything else. No, we'll move on quickly. There's a lot to cover, and I don't want to take up too much time on any one thing. There's going to be video lessons about almost every topic again, and every trade is going to be somehow correlated to everything I talk about. So we're going to go a lot more in depth in kind of little things all the time. So another strategy is dollar cost averaging, and this is something that I'll just kind of read a little bit because I kind of wrote it out already. This is a common way to buy anything, equities, currencies, commodities, you name it. Basically any asset, this is one of the most common ways. I often refer to it as averaging in. When I'm in the chat room, I say, I just averaged in or I averaged down. If the price is going down and I want to buy some more. I do this on a very intraday level. So if I'm day trading, I usually get in with, a third of the amount I want, and then I, keep buying down or I keep buying up. Because usually my initial entry is not that good. I'm not that great at finding that perfect bottom, especially on dip buying. It's not my strong suit, but I'm getting better at it. So I really like, dollar cost averaging, even on an intraday level, super, 1 minute, 5-minute chart. To me, it's only helped. So, but as an investment, you could even do it over a long term, right? You could do 500 every week. You could do 500 every month, depending on what's the convenient setup for you. You could even instead of every week, you could just average in every time a indicator like the RSI shows it's oversold. Like I said in day 3, don't really use indicators, but if you're on a super multi-month, or you're on the day chart and you're looking at a month, and you see every 3 months the RSI or one of your indicators you're looking at which says this might be a good entry. Typically, if you're dollar cost averaging, it wouldn't hurt as long as the company is going to be around in a few months or a year, depending when you want to get out. So in the end, I'll call it dollar cost averaging as more of a strategy to build my swing positions more than a strategy on its own. And so that's something you're going to really see from me. So a little thing here, many people believe that you cannot predict the market, and honestly that's really true. You might think, wait Alex, you're a day trader, don't you have some sort of edge, or don't you believe that you can't predict the market? But review day 3 again. Remember, we're not trying to predict anything here. What we're trying to do is ride momentum, and if that momentum dries up, or if it goes against you, we cut our position. So it's really day trading is more of just a strategy. You're not and trying to play the odds and then cutting your losses when it doesn't work. So we're not really trying to predict anything. And with investing as well, even if it's pure value. So like I said before, we're rarely using this strategy, but on some new projects, or it might be the case if the market is really low, maybe I'll just start averaging in if I have no idea what's going on, but I really like the project. Again, this is something I typically don't do as much. I'll usually use this as an entry strategy for a swing trade, if anything. And this is actually one of the reasons why, is because I did this once with a company that was, I don't remember the price, it was in the $5, and I wrote this company down to the pennies, and it was not a very glorious ride. So for me, if I see something really going down, I typically get out. Okay, the last strategy we're going to review, I know it's already getting along, and hold in there, but staking, it's really interesting, and it's kind of unique to crypto in a way. It's one of my favorite strategies if I tie it into swing trading, right? Because not just a swing trade you might be holding for a few months or a few weeks, you're also making consistent, usually monthly dividends on it as well. So it's just like a company as AT&T, for example, pays out, I don't know what it is, I think it's 4.5% dividend every year, and then they pay out quarterly. A lot of popular coins like NEO, for example, they pay out also a dividend, right? And you get that, even if you hold it in Binance, you get that paid out in gas every month, in the beginning of every month. So I find that really cool. I love holding those coins, especially when I think I'm going to be holding this position for a longer period of time. I think it's quite amazing, and why not? So, and I think a lot of other people think it's amazing, which really helps those coins kind of get a bit more popularity and people talking about it. So as I said before, it's basically the same as holding a stock that pays a dividend. What's also kind of interesting is sometimes the coin pays out in the coin, but sometimes it pays out in something else, kind of like how NEO and gas work, right? You hold NEO, but you get paid out in gas. How do we stake but also swing trade? As I talked about before, it's really all the same stuff, right? So you're looking for that nice swing, and in the meantime, while you're holding that, you're getting paid your dividends, so your staking reward. But the one thing I would want to talk about is you have to make sure that you're holding it on an exchange that pays you that, or you're holding it in a wallet. You typically always want to take your coins off a wallet, off an exchange, for pure safety reasons. So that's something to consider. But if it's a week or two, I oftentimes hold it on Binance or something like that. I don't want to say that's the safest way, and it is definitely recommended to always take your currency off an exchange. But sometimes you have to consider, is it worth it? There's also things that can go wrong by transferring coins. So that's up to you. I'm not going to get too into that. I'm going to focus on the trading. Sometimes if a price really runs up in a swing trade, and I'm also staking it, sometimes I'll be a bit hesitant to get out. But there's really nothing wrong with taking profits, and then you can always buy back later, right? It really comes down to why in the beginning of a trade you want to really know if it, what's your goal with this? Do you want to hold this for 2 years or just get pure staking and don't really matter what's going on? Because that's really important. It's really easy to think now, like, I'll figure it out as I go, but trust me, there's going to be some really low points, and that is not the time when you're going to want to cut your position. So if you're going into a trade and you want to stake, just know that ahead of time that the market could tank extremely. And if this is your plan, then you're going to hold it for the long run. Otherwise, if it's a swing trade, you should probably cut your losses, when it goes down 5-10%. So you don't want to switch up your trades, and that's the most important thing. And this is why I separate trader and investor, because the worst thing that you can let happen is when a day trade, where you're looking for a quick breakout or something, and it doesn't work and it goes down a little bit, and all of a sudden you're holding that day trade and you're like, oh, you know what, I'll just hold it till it comes back up. And then all of a sudden it's down 50%, 4 months later, and you're still holding it. That's called holding a bag. You don't want to become a bag holder. If that was going to be an investment originally, you probably would have never bought at that high looking for that breakout. You probably would have bought, you probably maybe averaged in, or you probably would have tried to buy at some lows. It's a whole different strategy. So don't let a bad trade turn into investment. And this is also the same as staking. Don't let a swing trade all of a sudden turn into a stake trade. and be like, I'm just going to be a staker on this, screw it, this trade didn't work well. No, like you're playing with fire at that. You want to be really consistent with your trades. You want to really follow strategy, and that's really what I preach in this course. In the next video, so the last video of day 4 in the crypto trading course, we're going to review my ideal portfolio allocation and ideas on how you can come up with your ideal portfolio allocation. So I'll see you there in a little bit, and ciao for now.